GST got started from July 1, 2017. Biggest indirect tax reform. Biggest. I'm telling you, since independence, it was the biggest indirect tax reform wherein multiplicity of taxes subsumed into one basket, GST. 17 indirect taxes and 23 cess merging into one basket. Cascading of taxes, tax on tax, gone in GST. Now, only barring a petroleum product or certain item which is being barred under section 17, subsection 5, credit is not available. To that extent, cascading is continuing, otherwise cascading gone. And just to give a flavor, that pre-GST central excise duty charged by a manufacturer, credit was not available in the hands of VAT dealer. VAT dealer selling the laptop to a company secretary was not in a position to avail credit of VAT. And when practicing company secretary was charging service tax to a VAT dealer, no credit in the hands of VAT dealer. So cascading was there, tax on tax, which is gone in GST. So there's no cascading. And third, double taxation. You have seen in pre-GST, there were certain items exposed to double taxation. Look at works contract services. Look at ERP. Look at restaurant services. Look at construction services. Service tax was leviable and VAT was leviable. But this is being done away in GST. In GST, either supply is a supply of goods or supply of services. But importantly, GST law from Kashmir to Kanyakumari. Now it is one law, one market. And it is applicable from Kashmir to Kanyakumari means that if Rajesh ji is sitting in Gujarat, he is well versed with the Gujarati language. And let's say I'm sitting in Delhi, I'm well versed with the North India language. And there are lot many viewers sitting in South India, maybe in Karnataka, maybe in AP, maybe in Kerala. I may not be knowing their local language. So this language barrier gone. Previously in pre-GST, we were divided into state barrier, but now it is one law, one market, common market, applicable from Kashmir to Kanyakumari. If I know GST law in Delhi, I can do practice pan-India. It is a uniform law, and that is the greatest advantage. That is how we got started. July 1, 2017. What makes difference? Why we are talking about next generation 2.0 reform? Honorable Prime Minister on Independence Day, 15th August, he made the announcement that we are going to have next generation GST 2.0 reform. So what is being done? He picked up three important pillars: structural reform, rate rationalization, and ease of living from GST perspective, which is giving ease of doing business. So what are the changes? What are the recommendations made by 56th GST Council meeting held on 3rd September 2025? So let me first touch base. You can note down just in a pointer form. This particular video I'm sure will be available even after my deliberation today, so you can watch later also. But it would be beneficial for all the viewers if they can keep one paper, one pen or pencil, just pointer. This might help you to grasp immediately what are the important recommendations. And I'm going to touch base all important pointers. And even after the deliberation, we will have open house session. So any question coming into the mind of any viewers, they can post their queries, and definitely Kanika is just sitting around. She is going to ask all the queries to me at the end of the session. But you can post your query wherever you feel like. So first one and the biggest one, rate rationalization. As on date, we are having a GST rate of 5%, 12%, 18%, 28% with compensation cess. So what is rate rationalization? Two-tier rate they are referring to. They are saying there would be now only 5% and 18%. So item falling under 12%, has moved to 5% or nil rate. An item falling under 28% plus compensation cess is moved to 18%. And some of the luxury and sin goods, big car, tobacco, your beverages, Coke and Pepsi, a special rate category which is 40%, they are going to fall under 40% slab. Importantly, now there will not be any compensation cess. So compensation cess is gone. No more applicable from 22nd September 2025. Now you'd be thinking, what is this 22nd September 2025? We are standing today on 11th September and I'm referring to 22nd September. Important, these rate changes which I'm going to announce, which I'm sharing today, it's going to be effective from 22nd September 2025, which would be midnight of 21st September and early morning of 22nd September. So you need to be ready to make sure these changes are taken into consideration and implemented. And there are a lot of transitional queries which I will take up today in my webinar. So what are the effective rate? 5% and 18%. And there's a rate of 40% applicable only for sin and luxury goods. But to keep in your mind, there is nil rate continuing. There is 3% rate applicable for precious stones and jewelry continuing. So what are the rate now going to be? Nil, 3%, 5%, 18%, and 40% with no compensation cess. Now there's only one item on which 28% GST with compensation cess going to continue, which is pan masala, gutka, jada, unmanufactured tobacco. Only on these specified items, the rate of 28% plus compensation cess will continue. Otherwise, all sin and luxury goods under 40% slab and no more compensation cess. No more compensation cess. Now, how long this specified goods continue to be 28% plus compensation cess? It will continue till the time loan taken by the state towards compensation cess funding, they will repay back along with interest. And Honorable Finance Minister going to decide the date by when this 28% plus cess for specified goods will go away. And I've heard it is going to be only up to 31st December 2025. So rate is clear to all of you. So for your confirmation, for your knowledge, nil is continuing, 3% continuing, 5% continuing, 12% gone, 18% continuing, 28% gone. Barring the specified goods which I referred, it would be 40% now for sin and luxury goods, but no more compensation cess. So this was the first part of the story. Now, second part of the story. Which all sector, there are so many sectors, and they have issued the press release. I do not know how many of you have seen the press release which got issued on 3rd of September 2025. They have picked up 24 sector. I'm telling you, 24 sector specific rate changes and their implication. So I do not know in which category, in which sector you are falling. So in case you want to see the impact on you, you must take down the press release and look at your sector specific changes. They have put 4 annexure, rather 5 annexure in that press release. Annexure 1 talking about HSN wise rate changes for applicable for goods. Annexure 2 is referring to sector specific HSN wise rate changes for goods. Annexure 3 applicable SSE wise, SSC code wise, means HSN or SSC code for services wise, rate change applicable for the services. Annex 4 talks about service sector specific impact, and Annex 5 talking about the measures taken for the trade facilitation. So this press release of 81 pages is a comprehensive document which is available on public domain. You need to go and cross-check which sector you belong to and what is the impact. But just to give a flavor to you, all essential and necessary items are either moved from 18% or 12% to either 5%, even at a nil rate. Even at a nil rate. So they are being moved, all necessary and essential item. If you look at education sector, all exercise book, pencil, sharpener, all are now nil rated. Move from 5% to nil rated. Come to the health sector, all important drugs and medicines are either now moved to 5% category and even made nil. So your LIC, life insurance policy or health insurance policy is now going to be nil rated as against 18%, which was 18% GST slab. Now it is going to be nil rated. So effectively pricing is coming down for the consumer. Now, if you go to consumer durable sector, air conditioner, color television beyond 32 inches, dishwashers machine, all move from 28% to 18%. Consumer durables. Come to the cement, which is important for affordable housing, housing for all, which is the slogan by Honorable Prime Minister. So it is again moved from 28% to 18%. So look at effective cost for construction of house will come down. An estimation is around 3.5% to 4%. There would be reduction in costing for construction of houses in India. So I said even fertilizer sector, agriculture sector, they have picked up and they have reduced the rate either to 5% or even at nil rate. So seeds, pesticides, which is important for farmers, they have made it affordable now. Even tractors, which is important for agriculture sector along with its parts, is now only 5% from 18%. So these are the changes I thought I must draw your attention. Sector specific, but important for all of you. But if you are falling into in any other sector, you may kindly cross-check Annex 1, Annex 2, as I stated. So these are the changes. Now, having said that, important one, why Honorable Prime Minister has announced this rate rationalization, next generation 2.0 reform. This is the big question in everyone's mind, right? Let me tell you. Honorable Prime Minister wanted to boost and motivate Atmanirbhar Bharat, self-reliant India, vocal for local. Of course, amid threat of US tariff, lot of discussion going on because US has imposed tariff of 50% on India. There would be some denting on our GDP and estimated to be around 0.2% to 0.5% of our GDP because of 50% US tariff is being imposed from 27th of August 2025. But look at with this next generation 2.0 reform, if pricing for goods is going to be come down because of GST rate reduced. So what happened? Ultimate consumption will go up, demand will go up, and when demand will go up, my GDP, the whatever factor coming because of US tariff will get compensated with a local boost. Make in India, vocal for local. And that is how I'm estimating that this is going to be turnaround for India GDP when you look at. So this is what next generation 2.0 reform. So I given you brief background. What is this next generation 2.0 reform? I said what is the rate rationalization which is being done. Now I'm going to touch base the important transitional issues which is immediate action point for any industry. So I hope all of you are ready to pick up these pointers for immediate correction. I'm sure all learned company secretary, either under employment with the company or practicing sitting and watching this webinar, they must make sure their taxation manager is also sitting along with you so that you can understand the implication of transitional issue and immediate action to be taken without any further delay. So let's start one by one. The first one. Now, there's a concept called anti-profiteering. What is this concept? This concept is now rate is being reduced, right? From 18% or 12% to 5%. Let's assume for understanding sake. Then you need to pass on the benefit to your consumer. There should be reduction in your pricing for supply of goods. Then only consumer is getting benefited, right? You can't keep this reduction in GST, the profit element with yourself. If you are keeping this profit element with yourself, that is called anti-profiteering. You're profiteered, which is not supposed to be your profit. It must be passed on to the consumer. That is the ultimate objective. Question comes whether we have any anti-profiteering provision in GST law. Yes, it was there when GST was started. But as on date, there is sunset clause. There is no more application of anti-profiteering. Of course, Section 171 continuing, but there is no anti-profiteering law as on date. So who will ensure that commensurating benefit is passed on to the consumer? Am I right? There are certain pointers. Let me tell you what Honorable Finance Minister has said. Honorable Finance Minister Nirmala Sitharamanji has said that she is confident and she put trust on industry and commerce. She said that I'm confident that industry player will calculate the commensurating benefit and will pass on by way of reduction in the prices of the goods effectively from 22nd September 2025. So you must know what is the effective date, 22nd September 2025. But you'd be asking in this related whether notification got issued. No. As on date, amendment in the rate notification for goods and services yet to be issued. Whether circular got issued? No, nothing. We all are waiting. So this webinar is important. So again, back to anti-profiteering, you must calculate commensurating benefit to the extent of reduction in prices to be passed on to the consumer. So what Honorable Finance Minister has said, I'm hopeful industry will do the calculation and will pass on the commensurating benefit. And she has given some example. When GST law got introduced, around 700 cases, 60% and above cases got filed in initial 3-4 years of GST implementation, and total amount which was under dispute is only 4,362 crore rupees. So she said there is not much litigation on this anti-profiteering. I'm hopeful because we are into 9th years of GST, and the way Honorable Prime Minister has announced it, industry going to be disciplined and they will calculate. They will calculate commensurating benefit for reduction in their prices for supply of goods to the consumer. This is the one part of the story. Second part of the story pertaining to this. When there is rate reduction, quite obvious your competition is going to reduce the rate, right? Can you afford not to reduce the rate? Can't be possible. So you need to remain in supply chain. You need to make sure your products are being sold in a market. If competition is reducing, look at any small car segment. All small car is moved from 28% to 18%. In small car segment, whether it is Maruti or Tata or Hyundai, anyone, if one player is reducing the price, can other player afford that I will not be reducing the price? Otherwise, they will lose the market. So competition will force you to do the commensurating reduction in your prices. Third component, importantly, when we are discussing anti-profiteering, whether when anti-profiteering provision is not applicable, whether government can take any action against you. I'm just asking this question. So you may just check within yourself whether possible, not possible. Of course, from GST law perspective, there is no anti-profiteering provision. But there is Consumer Protection Act. Consumer can always see whether you're passing on the benefit or not. If you're not passing on the benefit, he might file a legal suit against you under Consumer Protection Act. So you can't say that there will not be any legal remedy. Fourth, Honorable Finance Minister has said again and again after 3rd September 2025 that all central GST officials and state GST official will keep close watch whether you are doing the commensurating reduction in prices or not, which must be passed on to the consumer. So you can't say that I'm free, I can do profiteering. No way. This is not the objective. Objective is this reduction must go in the hands of consumer. So you must keep this factor in your mind. You have to do it. And there are other legal recourse available which can be seen as a measure to check and control. Having said that, now next question comes. You're having unsold inventory, right? So your manufacturer, supplied, it is lying with you also, and it is lying with your distributor, dealer, and retailer also. And quite obvious, they might not be able to sell up to 21st September 2025, where higher rate is applicable, less 18% or 12%, which is now reduced to 5%. So what happened? Those unsold inventory, there is already MRP sticker. What compliances you need to do? So on 9th of September 2025, Ministry of Consumer Affairs has issued a circular. And as per this circular, they are stating first that all manufacturer, importer, and packers on their unsold inventory where old MRP is there, they must affix the revised MRP with the commensurating reduction in the prices on their unsold inventory. So this is, and how you'd be doing that? By way of stamping, sticker, and online printing. So there would be old MRP, alongside there would be revised MRP. There should not be overlapping. So on the same pack, there would be two prices, the old MRP and revised MRP. And revised MRP by way of stamping, sticker, or online printing. How long you should do that? There may be possibility that unsold inventory might take time, right? So they have said that you should make sure this inventory get adjusted until then, or by 31st December 2025, whichever expires earlier. Whichever expires earlier. And quite obvious, whatever you are manufacturing after 22nd September 2025, you would be having that reduction and then MRP is being affixed. It is only for the unsold inventory which I'm referring to. Second, pertaining to this item, you must do the newspaper advertisement, minimum 2 newspaper advertisement, and make a mention of before and after MRP. So original MRP and revised MRP. Third, you must intimate to the Director of Legal Metrology Central and to the state concerned legal metrology department. So this is obligation on manufacturer, importer and packer. But now next question which is important for us to know, whether distributor, dealer, retailer, are they manufacturer? Are they importer? Are they packer? They are not. So this circular is from Consumer Affairs. It is not from GST law perspective. So you may be having a lot of legal, repercussion. Sir, how come this is applicable to me? You can say that because they have referred Rule 33 of Legal Metrology Package Commodities Rule 2011. Let me tell you, ultimate objective of this next generation GST 2.0 reform is you must reduce the price, pass on the benefit to the consumer. And I've said there are alternative, pointers wherein you are under compulsion and it's obligation for you. But what you would be doing for distributor, dealer and retailer, whether this is obligation on manufacturer, see, as per law, no. So distributor, dealer and retailer are themselves responsible for doing the changes. But now here, being manufacturer and OEM, you are the master. Let's say I'm talking about, let's say you take example of Maruti. Maruti is a brand, manufacturer. But Maruti is having so many distributor pan-India. And all those distributor would be having stock lying with them, right? So prices need to be reduced, right? It need to be reduced. So being manufacturer, you will take initiative to do all the basis of calculation and then intimate to your supply chain to reduce the prices accordingly, to pass on the benefit to the consumer. And it would be internal between manufacturer and distributor or dealer or retailer to compensate or do commercial adjustment between yourself. But the reduction must go to the consumer. So directly or indirectly, being manufacturer, you need to ensure your supply chain also adopt the same measure. And it can't be that you would be doing only for yourself, for your stock lying in your factory or your warehouse. You have to make sure whatever stock lying with the distributor, dealer and retailer, that should be having the same pricing benefit to the consumer. So it is overall correction need to be done. Now here last item, you may be having packaging material which you got printed with old MRP. Can you use such packaging material even after 22nd September 2025? Answer is yes, you can do that. But last date would be 31st December 2025 and you need to affix the revised MRP on the same packaging material, either through stickers, stamping or online printing, so that you need not require to scrap your such packaging material. So this was pertaining to change on MRP. So I've said MRP change. I've said on anti-profiteering. Now I'm coming to the compensation cess and ITC related issues. Listen very carefully because these are very, very important. We are listening and a lot of queries coming to our way and a lot of question is being asked. So I'm trying my best to explain each of the component in detailed part. Let's start with the compensation cess, item number 3. So I'm discussing point wise. If anyone who is listening me carefully, they can note down these pointers. And of course, these pointers will help you to memorize later after this webinar that what all point we have discussed today. On compensation cess, I have said, but I'm again asking, is it going to be continuing after 22nd September 2025? Answer is no. No more compensation cess. No more compensation cess. Except specified goods. What are specified goods? Pan masala, jarda, gutka, unmanufactured tobacco, only on such specified goods. Otherwise, no more compensation cess. So today, I'm telling you one live case study. I was on a particular press on G Business. They invited me as a panelist and they asked me one question, Bimalji, GST 28% slab reduced to 18% slab for the small car. So quite obvious pricing for the small car will go down post facto 22nd September 2025. But what happened to the big car? Whether pricing will go up or pricing will come down, that is what they posted to me. This is what the question I got from them. Now here the important. When this question was posted to me, I said, even for the big car, pricing will come down. Pricing will come down. Effective from 22nd September 2025. So they asked, how come? How come price will come down? Because 28% slab is now 40% slab. I said, please bear in your mind on car, big car, 28% plus compensation cess, which is ranging from 5% to 17%, and effective GST rate is turned out to be either 48 to 50%. Which is now going down to 40% and no more compensation cess. So effectively for big car also, your pricing will come down from 22nd September 2025. So small car, of course, from 28 to 18, but big car moving from 28 to 40, there's the effect of compensation cess and you will get the benefit. Even for the big car, pricing will come down. Hope you are taking a note of it. There is another question which is important, and this has been hue and cry in the market. Presently, compensation cess is being charged by a manufacturer in automobile sector, and credit is being availed by the distributor and dealer. But from 22nd September 2025, there will not be any compensation cess. Even on coal, presently it is 5% plus compensation cess. But effective from 22nd September, it would be 18% with no compensation cess. But they would be having credit of compensation cess, right? So compensation cess credit can be used only for discharging the liability of compensation cess, which is now going away from 22nd September. So what happened? The credit lying with them, can they get the refund from GST department? Or it can be used with my GST liability? What would be the way forward? See, compensation cess credit can be used only for the compensation cess liability, which is no more available. Now there is no refund mechanism and there is a specific frequently asked question they have issued, and in that frequently asked question they have said you need to reverse, I'm telling you, you need to reverse the credit of compensation cess. If that is the case, it is additional cost. It is burden. Who will bear the same? So this is what industry is representing to the government, but FAQ clearly saying you need to reverse the credit of compensation cess, which is no more applicable effective from 22nd September 2025. But let's wait and watch. If government can provide some mechanism, otherwise straightforward need to be reversed. So I've done on compensation cess. Now coming back to certain important question pertaining to input tax credit of GST. It may be under any head, CGST, SGST, UTGST, IGST. Let's start my discussion. Item number 4. So point number 4. Let's say a particular product which is applicable to me, my existing rate is 18% or 12%, existing rate reduced to 5%, effective from 22nd September. Am I right? So it is reducing from 18 or 12 to 5%. And inward supply input tax credit on the said product for me is around 9%. So ITC which I'm generating on my purchase is 9% versus my output of 18% or 12%, which is now reduced to 5%. Question number 1 pertaining to this: whether my ITC will also get reduced to the extent of my output tax liability? Answer is no. Your ITC will not get reduced. So whatever you have availed as 9% credit will continue to be with you. But way forward from 22nd September 2025, which is my next question. So ITC accumulated at 9%, my outward tax is only 5%. It will take time to get it adjusted because it is depending on my value addition. But it will definitely take time, subject to whether corresponding GST rate on my inward supply is also reduced. So you have to find two questions here. First, my past credit, which is accumulated at the rate of 9%, what will happen to that? And second question, whether my inward supply GST rate also reduced when my outward is reduced to 5%. So two big questions. Pertaining the first one, credit availed at 9% continue to be with you. You can utilize till the time you can utilize the same, but there would be time block. Working capital get choked for the time being. Second, we have to cross-check sector specific, whether the corresponding GST on inward is reduced or not. If it is not reduced, then the question of inverted duty structure. Inverted duty structure. So if GST on input is higher versus GST on my outward, the question of inverted duty structure will come. So this accumulation which is happening, am I entitled to get the refund under IDS inverted duty structure? Answer is yes, I'm entitled. You will get the refund only on input, not on input service and capital goods, because as per GST law, there's no refund under IDS for input service and capital goods. You will get only refund on input if GST rate is higher on input versus GST rate on output. Only to that extent, if accumulation is there, you will get refund under IDS. Government has tried their best. They have picked up sector specific. They have tried to minimize the IDS impact, inverted duty structure impact, like textile sector. Man-made yarn is 18%, but outward is only 5%. So they have reduced the GST rate on man-made yarn to 5% to minimize the IDS impact. That is how you need to look at your sector specific. This 9% accumulation will continue. If continues, IDS. So if IDS is there, then they have made another announcement which is important for all of us to note. They have said we will give you 90%, 90, provisional refund within 7 days, for IDS. But keep to your mind, no refund on input service and capital goods, only on input. So to the extent of input service and capital goods, your ITC keep on accumulating if you are not being able to afford with your output tax liability. Only on input you can draw refund under IDS, and for that announcement is 90% provisional refund within 7 days. But my question is, even though if I'm getting 90% provisional refund within 7 days, but there would be some time lag. So for a particular month, let's say we are in the month of September, which is September, quite obvious, I'm going to finalize my GST return by 20th October, right? So there would be time lag, a month or 45 days. To that extent also working capital gets blocked. To that extent also working capital gets blocked. So this is what the complication. But third one, which is important here, whether this announcement of 90% refund of provisional basis, will I get on time? Because we have seen in GST law, and you all will agree with me, put in a comment box. I've seen we are not getting refund on timely manner. So it must be implemented in letter and spirit. Otherwise, again, it is going to create a chaos. So if at all we are looking for each for doing business, we must get the refund. But they have put one condition and rider. They will do risk analysis. And as per the risk analysis, if you are non-risky, then only you will get 90% provisional refund. Otherwise, you will not get. So this is what pertaining to IDS, I connected with the ITC accumulation. Now coming to the point number 5th. There are specific cases where they have said your supply going to be exempted. Am I right? Exempted. So what happened to your ITC, input tax credit? We can take live case study, life insurance policy or health insurance policy for individual. GST rate is reduced from 18% to nil. All right. When it is 18%, I'm entitled to avail credit. So let's say my ITC incidence on inward is 9% and my outward was 18%. This is the present scenario. But from 22nd September onwards, they are saying outward is going to be nil. Am I right? So if it is nil, then two questions important. First, there would be credit lying with you. If you are not in a position to use till 21st September, what will happen to that balance credit remain in your e-credit ledger? What happened to that? I'm just posting this query. Will you get refund from the department? You may be thinking, what happened to that my credit? As per section 18, subsection 4, it need to be reversed. It need to be reversed. And even section 18, subsection 4 talks about pertaining to goods, which is now exempted. Then you need to pay the GST on input in semi-finished goods, input in finished goods, and even on capital goods for unexpired period. You have to pay GST and balance remain in your e-credit ledger need to be reversed. So this all insurance company having credit with them, not able to utilize till 21st September 25, they need to reverse. Second, if their supply is going to be exempted post 22nd September, as a consumer, let's say you are taking insurance from ICSI Lombard or Tata AIG. Today rate is 100 plus 18, 118. Tomorrow as a consumer, you would be expecting it would be 100 rupees, right? But that is not the case. This insurance company was getting even 9% inward GST as a credit. But being his outward now exempted, then he will not get the credit because it is exempted supply. So what happened to this 9%? What happened to this 9%? What this insurance company will do? Government is saying, if at all you are getting benefit because of rate reduction, you must pass on to the consumer. So as a consumer, I will look at the pricing from 118, it should be 100. But that is not the realistic case. So 9 rupee, which is my ITC, which is no more available as a way forward, then that is going to be part of my cost. So effective pricing would be 109 rupees. But consumer might not be knowing this factor. So what you will do as a supplier, for you need to create the documentation, proper documentation, so that you can back your calculation tomorrow if any litigation or query comes. So these documentation must be shared with the concerned authority also. Sir, this is my scenario in terms of costing and pricing. So tomorrow you should not bounce back on my head, because ITC which was available to me will not be available because of exemption, nil rated. So it is going to be part of my costing. So effective pricing would be 109, not 100 rupees, which consumer might not be knowing. But you need to create the backup documentation, supporting, need to be intimated. And it is applicable for any other sector and scenario where I'm referring to. So hope you got this point. This point is very interesting one. So I have communicated this part as well. So this is on fifth point which I communicated. So Rajesh, I was continuing with the transitional, but I've seen that sometime you have switched off your video, sometime you're switching on. I'm trying to make in a very lucid manner. I do not know to what extent, but I'm trying my best to communicate the transitional issues, which is important in these days before 22nd September. I hope you are getting my pointers in clear terms. If you can just say a few words, so I will get feel of it. Yes, it is very much clear, and of course, it's a way forward action from our side. Then I will again, touch base other important pointers.
Please continue. Whatever you are deliberating is very, very apt, very, very plugging our queries.
Okay.
So go ahead with the flow, whatever you are still remaining, and
Perfect.
then we will have a question answer.
Perfect. Thank you very much. Thank you very much. So coming to the now sixth point. I said they have tried to done away inverted duty structure, and for refund also I have communicated. But while doing the analysis, I have come across that while doing the rate rationalization, they have created IDS also. One live case study I'm giving to all of you for your interest. Basic paper, presently 12% GST, 12% GST. Now 12% GST no more applicable, so they have increased the GST rate to 18%. This is one part of the story. And this analysis comes only when you deep dive down to the, all the documentation. Now, paper is the need for manufacturing of corrugated boxes and non-corrugated boxes. You have seen when you're placing order to McDonald's, Swiggy, the bag comes in made of paper, right? So corrugated boxes and non-corrugated boxes, there was slab of 12% GST. They have reduced to 5% GST. Presently, paper 12%, corrugated box and non-corrugated box 12%. There was no IDS. And 60% or more is the raw material component is paper only for this industry, corrugated boxes and non-corrugated boxes. 12% was okay. But with this rate rationalization, they have created again IDS here. Paper GST increased to 18% from 12%, and output is reduced from 12% to 5%. Quite obvious, there would be accumulation, right? So your objective is to done away, minimize IDS, but while doing rate rationalization, maybe for other sector which you can watch, impact will come. So this sector is again into IDS, and they are now saying that was earlier was good. My raw material paper was 12, my output was 12, no problem. But now again you created chaos for me. And now you're saying that I should go for IDS refund. They're saying I'm not sure whether I will get on time. So I'm only drawing your attention that things are from one side. You will only look at the news which is in the market, but other side, when you sit down as an expert, you will get lot many pointers where you need to draw, and you may require to sit down from your company perspective. Have you really started doing and working what is going to be impacted in terms of raw material, input, service, and then your output? You need to go back and check HSN wise rate changes, sector specific, and its impact overall in your costing and pricing. So this is what I have communicated to all of you. So having said, now next question, which is again important one. Let's say you have supplied goods from Delhi to Mumbai. Today, on 11th of September, I have raised the invoice with 18%, generated my eBay bill, and it is in transit until 22nd September 2025. It is not reaching Mumbai, let's say. So what happened? It is in transit, right? Do you require to cancel the eBay bill? Because this product, which is presently 18%, moved to 5%. Move to 5%. Do you require to cancel eBay bill? First question. And second question, what happened for ITC, input tax credit? Invoice is of 18% today. When received, rate reduced to 5%. So answer to the first one, no more cancellation of eBay bill. Not required. Will you get credit of 18%? Yes, you will get credit of 18%, but your outward going to be 5%. So your accumulation part, working capital for the timing till the time utilized, that is what going to impact you. So this is the next question which I discussed. Now coming back to one important pointer. We all know that from 22nd September 2025, this rate change is going to be effective. We all know about it. But there are a dilemma, and I'm creating dilemma for you. Let's say you are practicing company secretary. You are practicing company secretary. I'm your client. Let's say Reliance Industries Limited. I said, Mr. Jain, you give me one legal opinion. You gave the legal opinion to me today. On 11 September 2025, you gave the opinion, which is lying with me for my review. And let's say I have paid the amount to you also. This is one scenario, paid the amount to you, right? You need to raise the invoice. And quite obvious, when we get paid, we raise the invoice also. In this scenario, everything happened. Supply of service, 11 September. Date of receipt of payment, 11 September. Date of invoice, 11 September. All three before 22nd September 2025. So presently rate is 18%. Let's assume it is only for academic sake. It may be applicable for goods also. Now here, let's assume a particular supply which is from 18% to 5%, 18% to 5%. And now in this three given situation, supply is being made today, 11 September, but you are being paid after 22nd September and you are raising invoice after 22nd September. Only supply made on 11th September. So 2 out of 3 is happening after 22nd September. Question is, whether old rate applicable because supply is being made on 11th September, or old new rate going to be applicable because 2 activity out of 3 happening after 22nd September. So there is section 14 of CGST Act for transition, where change from old rate to new rate. For understanding sake and keeping to your mind, you can just keep and memorize. If 2 out of 3 happening prior to 22nd September, old rate. If 2 out of 3 happening after 22nd September, then new rate going to be applicable. So prior to 22nd September, old rate, post 22nd September, new rate going to be applicable. This is for only understanding sake, but the kind of example which I have discussed might create some confusion. And let me tell you one more example so that you can draw queries. Let's say today I'm raising invoice and today's rate is, let's say 18%. Let's assume 18%. But I'm being paid after 22nd September and I'm raising invoices raised today and I'm being paid after 22nd September. And supply is also being made after 22nd September. Only invoice is raised today, 11th September, which is 18%. But supply and payment all after 22nd September. So 2 out of 3 new rates should be applicable, 5%. But you have raised the invoice of 18%. What you will do? So these are the complications when you look at section 14, which is being referred in their frequently asked question. So you have to be very much careful about, and these transition provision, you can always look at how to do and deal and execute. When I'm saying so, the important aspect which is also connected with the subject matter which I'm referring to, that this interim time period, a lot of transaction need to be looked into from a perspective, how things need to be executed. So this was my own time of supply and rate applicable. Now coming back with the rate changes, they have also created confusion. Confusion of what? Let me tell you the live case study. Hotel, there's the accommodation. If per day tariff is less than 7,500, per day tariff is less than 7,500, then today GST rate is 12% with ITC in the hands of hotel industry presently. If their tariff is less than 7,500, then 12% plus ITC. But from 22nd September, they have said it would be 5%. But with no ITC, no input tax credit would be available to the hotel industry. Again, 2 questions for this hotel industry fellow. Today, I'm getting ITC because 12% applicable. If some credit which is being left out after 21st September 2025, what I will do? And second, from 22nd September 2025, you are saying no ITC, the impact. So whenever I'm calculating, commensurating benefit because of GST rate reduction, if ITC becomes the cost bottleneck, can I add to my overall pricing? To my mind, no challenge, but you need to document it properly. You need to substantiate, and that should be properly documented in such a manner that it can be calculated properly. So I'm just giving food for thought. And there may be a situation that within the same business, you may have 2 kinds, taxable supply and one becomes exempted. There is taxable also, there is exempted also. So to the extent of common input tax credit, you need to do pro rata reversal on your exempted supply in terms of Rule 42 and Rule 43 of CGST rules. So these are the pointers I thought I must draw your attention so that you can get a good flavor that what are the transitional issue which we are referring to. Let me touch base two, three more, and then I will touch base what are the important changes from law and procedure perspective. Let me touch base one important from law and procedure perspective. I do not know how many of you are doing a GST practice. We all are waiting for GST 80 Appellate Tribunal. We all are waiting for GST 80 Appellate Tribunal. We all are waiting. And we are looking for the announcement when it is going to be operationalized. In this 56 GST Council meeting, they have said GST 80 going to be operationalized by end of this month, September. So one of the big announcement, they are going to start GST 80 by end of September. And PH, personal hearing, going to start by December and December 25. So two big announcement, and they are saying any backlog appeal. Now GST 80 is going to be under digitalization. All online filing going to happen. Then all backlog appeal must be filed by 30th June 2026. All backlog appeal must be filed by 30th June 2026. This is what the recommendation made by GST Council in 56 GST Council meeting. I'm inviting attention for all of you. I do not know how many of you are doing GST practice, but as a company also you may have adverse order from first appellate authority, and you're waiting that as and when GST 80 get operationalized, I am going to file my appeal. So you need to start immediately. Now they're saying that it will be operationalized by September and PH will start by December, and last date for all backlog appeal filing would be 30th June 2026. So maybe we are getting hint from the government side. They are now serious, and GST 80 will start working on those lines. So having said, now let me touch base some of the sector where GST rate is not reduced, rather increased. Do you know any sector where GST rate is increased? Service sector specific, I have picked up that works contract services, which is the long-term contract, long-term spread over 5 years, 6 years, 10 years, 15 years, long-term contract. GST rate presently is 12% plus ITC, with ITC. It's increased to 18% with ITC, and quite obvious increase to 18% because 12% slab is going away. That is the region rate is increased to 18%. But what is the impact in the hands of supplier or the client who is a recipient? If rate increases from 12 to 18% with ITC, who will bear the additional burden of 6%? Is a supplier obligation or a recipient? If contract need to be looked at properly, whether contract includes GST as an inclusive or exclusive, you need to go back and cross-check. You need to open up those contract which is for the long-term contract and check whose liability it was. Was it inclusive or was it exclusive? Then you need to start negotiating with the client who will bear this extra 6%. So maybe all long-term contract, you need to revisit such contract and check and verify who will bear the obligation. So immediately you have to start. Coming back to the next important one, an interesting one. There are certain states who are giving subsidy on the basis of investment made in that particular state for manufacturing and thereby generating the employment. It is for industrialization in that particular state. There are so many northeast states. There are states like Uttaranchal. There are states like Sikkim. You must be knowing that state-specific investment, even some part of Maharashtra. You can go to different states, Gujarat. They're giving that you put your investment for manufacturing and it is for industrialization, we will give you some kind of investment subsidy which is based on SGST component cap with the value addition. Cap with the value addition. What is going to happen for such industry? Now GST rate is reduced. Quite obvious, my SGST component is also going to be reduced. If that is going to be reduced, then my refund entitlement will also get reduced. If only period specific benefit is being announced, then quite obvious my ultimate entitlement and benefit will come down. So all such investment subsidy, which is for industrialization, where we are getting a refund on SGST portion, net SGST portion paid through e-cash ledger, going to be reduced because of GST rate reduction. So you need to revisit. Can you really look at promissory estoppel? It is not a case of promissory estoppel. It is rate reduction. So they are giving you depending on value addition and net payment by you. So I'm not finding it is against promissory estoppel. So maybe you have to look at from that perspective as well, that what would be way forward for you. Now coming back to important changes, and then we will open the house for question answer session. So whatever question you are having in your mind, definitely I would be delighted to answer those queries. Let me finish 3-4 more pointers, and then I'm through with all recommendation which is being made in this 56 GST Council meeting. Next, they have said the concept of intermediary is going to be omitted, and it is going to help and boost export. So I've said in one line, I'm sure whether you are getting or not getting, I'm not sure, but let me create examples so that you will get real meaning of it. Who is intermediary, by the way? Let's say there's an Australian university contacting Bimal Jain in India and saying that you should identify and do some program in India to get the prospective student who will take admission into Australian university. If they take admission into Australian university, Australian university will pay me a certain consideration, which may be a commission or otherwise. So I'm being paid by Australian university. I'm having privity of contract with Australian university, and at behest of Australian university, I'm doing launching program in India. Those students are beneficiary only, but I'm having no privity of contract with these students in India. They are beneficiary. I'm letting them know what are the curriculum, what are the features, what are the program run by Australian university. It is for example's sake. Maybe US, maybe UK, and Chinese, any university. So I'm educating the student that these are the features you will get. So they are beneficiary, but I'm having no privity of contract with the student. What department used to allege, Bimalji, you are intermediary. You are only agent or broker between Australian university and student. And for intermediary, place of supply is location of supplier. Hence, it is not export of services. Location of supplier being in India, it is not export of services. Let me tell you, even this dispute was there in service tax regime. Since 1st October 2014, they have picked up the provision from service tax and copy pasted into GST under section 13, subsection 8, clause B of IGST Act. And since then, it is a dispute in GST. And these matters are traveling up to Supreme Court now. For pre-GST, Supreme Court has held the position, no, Bimalji, you are not intermediary. You are giving services on principal to principal basis to Australian university. You are having privity of contract with the Australian university. You are being paid by Australian university in convertible foreign exchange. It is sufficing and meeting out all the condition of export of services. It would be export of services. That is what a judgment given by Honorable Supreme Court recently. Considering all this litigation development, now GST Council has decided that they will done away the concept of intermediary, and it would be by default provision section 13 subsection 2 of IGST Act. So what would be place of supply? Location of recipient, which is Australian University, hence export of services. And they have said they are doing this to boost export. I'm very happy about it, but I'm only looking for, please do it retrospectively. You make it from July 1, 2017. So that all litigation which is created by the department can be done away at one go. When conceptually you agree it is export, and this is what done and held by Honorable Supreme Court, you must do it retrospectively to done away all past litigation. But otherwise, laudable recommendation. Next laudable one. Post-supply discount. In GST, there's a concept called post-supply discount. What is post-supply discount? Let's say I'm a supplier, manufacturer, and you all are my buyer. Let's assume you all are my buyer. I've supplied at 100 rupees, applied 18% to you, but post-supply, I'm passing on a discount by way of credit note. And why post-supply discount? Maybe you pick up a specified quantity, or you make the payment and cash discount, lot of milestone which has been prefixed. On that basis, I'm giving you the discount by issuance of credit note. So supplier issuing credit note, let's say for 10 rupees, charging GST 18%, which is 1.8 rupees. I get the adjustment. Supplier get the adjustment of 1.8 with his output tax liability, and being buyer, you need to reverse corresponding ITC of 1.8. This is what the provision under section 15 subsection 3. Now, what is announcement made in this 56 GST Council meeting? They have said, first they are going to omit 15 subsection 3 clause B Roman 1. What is the omission? In the provision, there's the condition that there should be agreement between both of us. For this credit note. And that agreement should be executed on or before supply is being made. And another condition was that whatever credit note I'm issuing as a supplier must have linkage with the invoice. They are saying we are going to done away this provision. We are going to omit this provision. Laudable one. We were repeatedly saying it is very difficult to link with the invoices because a credit note may be consolidated for number of invoices. At least they have understood this part and said we are going to omit it. Secondly, there was a recent circular number 212 dated 26 June 2024. See, for the past period, if as a supplier I'm issuing credit note and getting adjustment of GST charge on a credit note with my output tax liability, I was not sure whether my buyer has reversed the ITC. I was not sure, and there was no mechanism available. But at least, because there was nothing like coming from portal, so this circular was suggesting that buyer can issue a certificate from chartered accountant or CMA for which VCS must be equally at par should be allowed. That if that certificate is being issued for reversal, that will suffice the purpose. So they are saying we are going to done away this circular and it is all now getting automated on GST and portal, then relevance of circular is gone. Third, within this, financial credit note or commercial credit note. We have seen sometime financial credit note is being issued, commercial credit note is being issued without GST. So supplier is not taking any adjustment of GST component, then no need of reversal of ITC by the buyer also. So they have said we are going to issue circular. So we need to wait and watch what kind of circular. But of course, this announcement which is being made in 56 GST Council meeting will help us a lot. So this is what I've said. Now, some of the important law and procedure. in GST, getting registration is important, and we have seen the challenges for getting registration. And we have seen with the Aadhaar authentic, biometric, Aadhaar authentic taking too long a time. But now they have said we will give you the GST registration within 3 days. Within 3 days. To such small taxpayer whose monthly liability is less than 2.5 lakh, including all components CGST, SGST, UTGST, and IGST. So they are saying whose liability is less than 2.5 lakh per month, we will give you 3 days, within 3 days GST registration. So good announcement. And it is being said 96% of small taxpayer will get the advantage. So it is towards ease of doing business. Second, those who are supplying through e-commerce operator, they are supplier, small supplier, they are supplying pan India through e-commerce operator Amazon, Flipkart, Myntra, but they are not having their offices in respective state-wise. As per provision, it was stated they should have some place of business in the respective state. It was challenged. But now, this 56 GST Council meeting, they have acknowledged this point and they have said we are going to issue simplified GST registration process for such supplier supplying through e-commerce operator. So interestingly, this part is being communicated. Next on refund. Yes, I have said that 90% provisional refund to those who are struggling with the inverted duty structure within 7 days. But with this rate rationalization, I have seen that they have tried to minimize. They have tried to minimize this inverted duty structure like sector specific textile, fertilizer, chemical. So I've seen that they have tried their best, but still with the rate rationalization, they have created awkward position also. Like when I discussed paper being raw material to corrugated and non-corrugated boxes industry. So if you have to go back and you go deep, drive down into the impact part, you might come across that IDS is being created. So if IDS is there, then you're entitled for refund on input. You will get 90% provisional refund within 7 days, provided you are not a risky taxpayer. And they will do all data analytics through machine learning. They will check your compliances, whether you are non-risky, then only you will get 90% provisional refund. This 90% provisional refund, they have also announced for zero-rated supply. Those who are exporter of goods or services, or supplying goods or services to SEZ unit or developer, they are saying we will give you 90% provisional refund within 7 days. Now I'm questioning myself, this provision was there. Why you were not giving 90% provisional refund? Provision was there. What is the announcement you are making? It's your department who is not disbursing refund within the time-bound manner. So it's a hue and cry. You are sitting in a Delhi or sitting in another state, you must be experiencing, we are not getting refund within 60 days, which is the stipulated time period. Leave this 90% provisional refund within 7 days. This is existing, but we are not getting. But they have made the recommendation, keeping finger crossed and hopeful that I will get my refund in timely manner. But next question comes immediately to this: interest on delayed refund. When you are delaying, you're not giving me refund within 60 days. Are you not supposed to give me interest automatically? Do I require to file my separate application for getting interest on delayed refund? High Court is repeatedly saying that yes, you're entitled. You can get automatic. No need of refund application separately. But that is how whatever provision existing we are not getting. But you are making recommendation. I'm only keeping my finger crossed that at least whatever you're saying, it must be implemented in letter and spirit. When I'm discussing IDS, there's one document called frequently asked question. I do not know whether you have seen or not. That frequently asked question is giving answer of frequently asked question. Now, to me, what looks like? Some of the question which is being answered is not giving clarity, rather complicating it. I am picking up one more example. They are saying if your inward and outward is same, so let's say a particular trader purchasing a goods and he purchased at 18%, but it is now reduced to 5%, so inverted duty structure is coming out, but it he is dealing in same goods. So there's the one circular number 135, which is barring that you will not get IDS refund for same supply. Circular is saying, but there are different high court judgment which they are saying if IDS is being created because of rate differences, you're entitled to get the refund. There are 4-5 different high court judgment. But FAQ picking up their circular number 135 and saying you are not entitled to. So my submission would be, when Honorable Prime Minister has said ease of living, ease of doing business, your circular held to be contradictory, ultra vires by different high court. And when you have done away intermediary concept after 9 years of GST implementation, which was copy-paste provision from October 1, 2014, pre-GST regime, you are now going to omit the same. Why then we are not trying to reduce the litigation? When High Court is saying a refund is permissible even for the same supply because of rate differences, IDS refund is permissible, why then you are answering in FAQ that it is not permissible? See, we have to really, when we are talking about structural reform, rate rationalization, and the ease of living and ease of doing business, it must be done in a way it is being stated. Otherwise, the purpose and objective, we all are trying our best. India today, the 4th largest economy. We have surpassed the UK, who has done all, who has controlled India as a whole. Within 75 years, we have surpassed them and become 4th largest economy. We are $4.2 trillion economy. We are growing by 6.5%. Our GDP growth is 6.5%. When you do the comparison with the US is only 1.8%. China is only 4.5%. So we are on the verge of 3rd largest economy by 2027, and we are targeting to be the largest economy worldwide by 2047, Amritkal. So India is a growth story. Now, whatever US tariff threat was there was some kind of implication on our GDP as estimated 0.2 to 0.5%, but again gets mitigated with the domestic Atmanirbhar Bharat, vocal for local, self-reliant India, and this rate reduction towards boosting our local economy, local demand. And thereby it is being stated by Honorable Prime Minister, and then after 56 GST Council meeting by Union Finance Minister. And you will take a note of it that this 56 GST Council meeting, all the recommendation is being made unanimously, means there was no voting. BJP rule state and non-BJP rule state all come together and accepted the recommendation. So whatever we hear outside is something different, but inside within the GST Council, they have all agreed for these recommendations. One question was asked, and it is being asked by so many persons, what would be the revenue implication, revenue loss to the state? And those are opposition rule state, they are questioning because of rate reduction, there would be revenue loss to us. It was very nicely answered by Revenue Secretary, and he said There is nothing like revenue loss. Maybe implication, which we are estimating around 48,000 crore, taking data of 23-24. But you look at this is all dynamic. See, my consumer behavior going to change because of rate reduction. Today he's not willing to buy on bill, on invoice. Tomorrow when rate reduced to 5%, he will be the person who would be preferring to buy on bill. So informal economy will convert into formal economy. So consumer behavior. With this, compliance will increase. If compliance will increase, quite obvious, it will add up to my revenue collection. And then buoyancy, the effect of buoyancy. See, whatever we have seen in the past is not applicable in next generation 2.0 reform, then it is going to have positive impact. And thereby, whatever we are assuming as an implication may not be there. And we will have higher revenue coming up. And believe me, I've seen in my practical experience, whenever rate is higher, there is lot of tax evasion. When rate goes down, arbitrage goes down, evasion goes down, and revenue goes up. I've seen throughout. And I'm telling you, this is the positive sentiment, and we must be party to it. Being proud company secretary, and yes, is a capacity building program, knowledge sharing program. I do not know how many of you are watching Pan India, but I have tried my best to give all insight, all input pertaining to this biggest announcement, GST 2.0. But in case you're having any doubt, any query in your mind, I'm available on all social media. You can always put your comment. I will try to reply back. So with this, I'm summing up, thanking each one of you.